Time Profits here with a video about the capital gains tax rate and stock buybacks. The reason I bring this up now is I saw an article where one of the U.S. Congressman, Marco Rubio, has proposed raising the capital gains tax to deal with the issue of stock buybacks. So first I'll explain what stock buybacks are and why they've been a big deal recently. In 2017, there was a major cut to the corporate tax rate from in the 30s to the 20s, and that large percentage cut put an extra $1 trillion into the economy that companies were not having to pay taxes on. But what many large corporations then did with this funds, rather than building new factories, raising workers' wages, creating new products and innovation, was that they instead decided to buy back their own stocks. And the reason for this is that so much of executive pay for the CEOs, the other top executives, the board of directors, they all are financially incentivized to make the stock price go up. That's really what they're paid to do, more so than create innovation. As long as the stock price is going up, that's what people want to see. That's what makes their investors happy. That's what makes their investors rich. So with this tax cut, this extra $1 trillion, they would buy back their stocks, take stocks out of the circulating supply, and as a result, the price of the stocks would go up and everyone was happy. But this turns out to only be a short-term stimulus, meaning that it turns out to be a pretty bad investment for the companies, that the companies are buying their stocks when they're overpriced, and once the stock buyback stopped because they had spent all the $1 trillion buying back their stocks, the prices then dropped. So they were paying $100 for the stock when it's really only worth $80. They pumped the stock to $100. Everyone was very happy, but then when the stock buyback stopped, the stock prices dropped. It was just this one-time stimulus that didn't create the sort of real productivity gains that are good for an economy. So there have been lots of people complaining about it in America, mainly on the left. But what this was surprising is that Marco Rubio, who's on the right side of politics, he was proposing that to deal with this, you actually need to change the tax code. That the real reason that everyone was incentivizing the stock prices to go, the stock buybacks to occur, was that capital gains, meaning that if you buy a stock and it goes up from $20 to $25, you have to pay taxes on that $5 increase. That the capital gains tax is significantly lower than the tax on dividends. Dividends are, if you own an IBM stock, maybe every quarter you get paid $1 just for owning it, and that dollar is coming from the revenue. So they make $50 billion in profit. They send out that profit to each of the shares evenly, and you get that dollar in your account. But that dollar is taxed at your income level. So if you're making a lot of money, you're definitely be paying more in taxes off that. You might be paying 35% income bracket. So for the dollar of dividend, 35 of those cents end up getting taken away in taxes. Whereas if the stock price went up $1, you might only pay 20 cents in taxes when you decide to sell that stock. So this unevenness has created a perverse economic incentive whereby companies do not tend to pay dividends anymore. Have been frowned upon for a long time, although especially among tech companies they did not tend to do this. But then more recently they have started to do it, and if this does come into effect where companies don't have if the two tax levels were the same, the incentive to raise the stock price as opposed to pay a dividend, those will come more into a natural balance that people will have less incentive to just want their stock prices to go up and sell them as opposed to get the regular income of a dividend. People who invest to receive those dividends are doing a yield investment strategy, and it's not that popular, but some people are definitely dedicated to it and will get mutual funds or index funds that specifically try to get a high yield. So I do think this is an interesting proposal. Obviously, tax rates going up are always an unfortunate thing if you're an investor, but if it results in a more fair tax incentive that creates better economic outcomes in the long run, it would be a good thing. would like to start receiving dividends as opposed to just hoping that my stocks go up, because if the stocks go up, the only way for me to realize the gains is to sell the stock and then I don't have it anymore. If the stocks pay me a dividend, then I get to keep the stock, but I'm still earning money off it, similar to buying a house and earning rental income. It's a way to earn passive income. So if these two could come into alignment, hopefully what I'd like to see happen is that if they do end up taxing at the same level, perhaps lowering the two, at least tax them at the same level, but you don't have to bring them all the way up to necessarily the income tax rate, maybe meet somewhere in between. So especially if they can raise on the capital gains tax but lower the dividend tax, but make them both even, that I think will be the best of both worlds. But this is a story we should definitely keep a lookout on. If capital gains taxes are going to stay the same or go up, or dividend is going to stay the same and capital gains are going to go up, that would be a very negative incentive for investors. I'm going to put the article from CNBC in the description. So this is just something to keep an eye on, is possibly raising the capital gains tax and what that will end up creating for the future. Thanks for watching. Kind Profits out.